Well, hello friends, welcome to Easyequities. My name is William. I'm so excited that you are here. Today I'm in a car, so just make sure that you like this video and comment to show that I'm so into this so much, so that before I go home I have to just talk to you guys about one of the things that I've picked up, one of the things that I've researched. Today we're talking about it's a recap or an addition to the previous video, risk versus volatility. And in the previous video, actually, my main aim was to help people see that in risk there might be a high return, but in this video we're talking about focusing on volatility, looking at the volatility of the company and investing based on that, buying basically buying low and selling high. But I'm going to explain it after this short clip.
Views and opinions that are shared on this video or audio should not be taken as financial advice. I'm not a financial advisor, nor am I registered with FISCA.
So I took just 2 minutes of before I go back home, just to make a video, just to touch on what we spoke about on a previous video. On our previous video, we spoke about risk versus volatility, and basically how taking a risk can be able to help you with a high return. If you have a background of forex trading, you would know and understand what I'm talking about. But I wanted to actually just touch base on volatility. How can you, after looking at the volatility of the company, how can you make a sound decision that will help you to make an income, that will help you to make money? I have a tiny or small background when it comes to forex trading, and I don't speak badly about forex. If you want to go for forex, go for it. But I found that stock trading is much more easier and safer for me. But these things are all the same, it depends which platform you are using. But other than that, I wanted to touch base on volatility. Guys, when you have a forex trading background, you know how volatility works. When a company is not performing well, let's say for the past 2 months the company has been performing well, it moved from here to here, right? It moved from here to here. But this month the company has been performing badly, so it moved from here to here. So people that invested here and took out money when it was doing well in that 2 months, then they made a profit. But there are those people that are nervous investors. I like calling them nervous investors. What that means is that when the company starts going down, they want to take out their money when the company is going down. So when you look at the volatility, when you want to use it in a way that it will be helpful for you and so that you can be able to make profit in the future. Remember, the company started 2 months ago, it was here, and now it's here. And other people are selling here and they're making money here. But now after a couple of days, now the company moves from here, now it goes down. Now people are afraid. They're afraid that they are losing money. They're afraid that they're losing their savings, their investments. So now they take out the money in between here and they lose. Say from here to here, it grew of about 50%. And from here to here, the company lost about 50%. So if you have invested 100,000 rand here and it got here, so the possibility of when you withdraw, maybe you would have gotten 150 plus. But now, because you're afraid when the company goes down here, you lose 50. So that means that you are left now with 50,000 rand. So now you go and you try and take out all your money. And when you take it out, sorry about that, when you take it out, you take out 50,000 rand. So here, how volatility should work for you. When people are selling at the lowest point of the company, people are selling, the company is going low. It's been 3 months, the company is going, and people are selling. You buy, buy, right? And at one point, perhaps if you have studied, looked at the statistics, the reason why the company is going down, blah blah blah, and now they change the CEO, they get new management, and now the company within the next 6 months moves from here, where people have been selling and you've been buying, and it moves from here, it goes straight up to here. So you've been spending 2,000 rand, 5,000 rand, 100,000 rand, and lastly maybe 50,000 rand. And now when you withdraw, the company's here. When you withdraw from your investment, you have made a profit, a huge profit, because now the company moved from here to here. So that's how you should use volatility. You look at when people are selling, maybe at the lowest point of the company, you buy. And when you buy with the background of understanding that perhaps the company is implementing new measures, things are changing in the company, that's why the company is going a bit lower, but you believe that the company will do well, and you invest, and now the company does well. And when it does well, you get a huge amount of money. If the company is paying off dividends, then your dividends get to grow. If the company doesn't pay dividends and you decide, okay, I'm going to take out my money, then you take out a huge amount of money, a huge amount of profit. So that's how you need to be able to use volatility. Okay, you need to have that forex mentality in your mind to say that, okay, I'm going to buy at the low and I'm going to sell at the high, so that you can be able to make profit. There's one person, second thing that I wanted to say before we close the video. There is one person who said, I only wear I wear Louis Vuitton because I invested in Louis Vuitton. I wear Versace because I invested in Versace. That mentality was mind-baffling for me, and I wanted to share it with you just before we close. Invest in what you know. For instance, in your home, you buy groceries from Pick n Pay. Invest in Pick n Pay. And from Pick n Pay, you buy, let's say, things that are on the JSE stock market. You invest in those things. You invest in those things so that you can be able to make a profit. If they are not there, throw in your money in Pick n Pay, because you're wasting more of your money in Pick n Pay. So let's say, for instance, in a month, I waste about 6,000 rand on groceries, things that my wife needs, things that my children need, and so forth. It's about 6,000 rand. And for some families, it might be lower. For some families, it might be more. So say I'm spending 6,000 rand and I'm spending it at Pick n Pay. So what I'll do is that I would go on my, maybe to my broker, and I would invest in Pick n Pay, so that the money that I'm spending in Pick n Pay might recycle back to me, especially when companies or stocks are paying dividends. You know very well that, hey, I'm going to get this money back in every month, or every 6 months, or every 3 months, or every 12 months. I'm going to get the money that I've spent back, so that you can be able to make more than lose more. So remember, two things: spend on places that you know. Spend on places that you know, things that you use. If you're driving a Honda, invest in a Honda company. If you wearing whatever you're wearing, Adidas, Nike, make sure that you invest in those things. And if you are investing, don't focus on the risk, focus on the volatility, and make your research based on the volatility, and why are the people selling their shares, why are people selling their stock, why are people selling their units, and so forth. And when you find that the company is going through a change and it's going to be better for the company, you throw in the money, you buy what they're selling, and you sell at a high. Remember, buy low, sell high. I'm talking to stock traders: buy low, sell high. Secondly, that's how volatility works. Secondly, invest in what you know. Invest in what you know, in what you use. Invest in what you know and in what you use. So guys, that's me. Make sure that you hit the subscribe button. Make sure that you hit that notification button, so that we can make more of these videos. And also comment below. You know, I always say this, comment down the below, but comment down, and make sure that you know, you talk to us, share your views, share your opinions, share your desires. Maybe we'll be able to help each other. I'm sure there are other people that are investing and that have more knowledge on the things that we talk about. So thank you so much for watching our videos, guys. I appreciate it. Make sure that you share these videos so that people can be able to know the knowledge that we have. And I'm telling you, these things are important, and these things can change lives. These things can help people be able to build financial wealth or get financial freedom. Thank you so much.
Thank you so much for watching our videos. Make sure that you hit that subscribe button, the notification button, and also that like button. Also, make sure that you comment below so that we can be able to have conversations about everything that we learn.